What's up, guys? Hope everyone is doing well. So yesterday was a pretty big day for Bitcoin with the Bitcoin 2024 conference where we saw Donald Trump and other people speak about Bitcoin. But here we see this article going over Bitcoin mentioning a strategic Bitcoin stockpile, also saying that he, if elected, promises to fire the SEC chairman Gary Gensler, set up a crypto advisory council, and also promised to make the United States the crypto capital of the world. Furthermore, he outlined a plan to turbocharge crypto growth and make the US a crypto mining powerhouse. Also, to scrap any effort to create a central bank digital currency, CBDC, or digital dollar. Also, promising to make regulations friendly to crypto mining operations in the US. But to me, the biggest thing was this here, which I'll read in length, where the article says the crowd expected the Bitcoin Strategic Reserve announcement on July 22nd. Senator Cynthia Lummis of Wyoming posted big things in store this week on X. 2 days before Fox Business reported she would announce legislation for a strategic Bitcoin reserve at the conference. Lummis appeared before the crowd just after Trump walked off to announce a present to President Donald Trump, the Bitcoin reserve bill she had been drafting. She says, "This is our Louisiana Purchase moment," elaborating that the bill would take the Bitcoin President Trump just mentioned and pull it into the reserve, and that's only the beginning. Over 5 years, the United States will assemble 1 million Bitcoin, 5% of the world's Bitcoin, and it will be held for a minimum of 20 years. It can be used for one purpose: reduce our debt. The bill further provides that the U.S. will convert excess reserves at our 12 Federal Reserve banks into Bitcoin over 5 years, so that instead of holding a depreciating asset, the US dollar, which she said has been designed to debase at least 2% per year, it'll be holding an asset with potential for growth rather than the dollar. There's no arguing that the value of Bitcoin has increased over time, though it's no higher now than it was before Trump's keynote. It peaked around 69,000 this morning. As of just after Trump's talk, now sits around 68.4 thousand. Trump's desire to add Bitcoin to the country's strategic reserve doesn't mean it will happen, obviously. Even if he's elected. Ari Paul, founder of Block Tower Capital, an institutional investment firm specializing in crypto, took to X about a week before this conference to put the odds of Bitcoin receiving a strategic reserve sometime within the next 4 years at 10 to 1. The U.S. Federal Reserve currently includes assets like gold and foreign fiat currencies. They use as credit lines to keep the U.S. economy stable, particularly in times of crisis. Many in the crypto community have criticized it for encouraging the U.S. Treasury to print money during COVID-19, which has led to lasting inflation. Adding Bitcoin to the reserve could, per Loomis, cut our debt in half. Generally, I agree with the sentiment said here. I think this would overall be a better move than with the focus on fiat currencies, the dollar, and other things of that nature. When it comes to this founder of Block Tower Capital, Ari Paul, saying it's not too likely within the next 4 years to even see this happen, even if Trump does get elected, which I would generally also agree with that. I think it is, I definitely think it's possible, but I would put the odds at a lower rather than higher. And generally always just given this is politics, and if you did watch, which I did watch this speech from Trump yesterday, with politicians saying things, and a lot of times it doesn't happen for various reasons. So all that really needs to be taken with a grain of salt. But nonetheless, very good just in general for crypto, blockchain investors, these people that are interested in this realm that affects many aspects of societal life. Looking forward to seeing some sort of candidate and administration, unlike the current one in America, to be positive and healthy towards cultivating blockchain solutions, cryptographic currencies, etc. But for the first chart here, we see the 6 hour that I've been going over a lot recently. I had been mentioning, if we look down here at the RSI, we see this red resistance. Saw something very similar recently as well. Bitcoin broke out above it. I had been mentioning that it would could quite likely come down and test this once more, and then perhaps see a bounce, which it has done so far. Whenever Bitcoin hit the local load around 63.2, also wicked down to the 200 EMA as well, found a bounce there along with the retest of this RSI resistance. Then saw the next bounce up to the highest local high of recent, around 69.4K so far. Zoom in. From there, Bitcoin is down around 4% approximately. Could come down and further test this zone right here that I was mentioning, and find a bounce there. Could continue to go higher. Could also definitely come lower as well. As I've been saying, I think it's still definitely possible to see Bitcoin test approximately right here in this range around 60K. And if it starts to go below that, likely back down around 800 EMA, more towards around like 59, maybe 58, 58.5K with some wicks. But nonetheless, so far it's looking very good on here. Towards the upside, I mean, of this kind of broadening, descending channel here around 71,000. Bitcoin continues to go higher here and not lower, as an important target to break out for this channel overall. Here, this 2-day chart that I went over in the last video. Mainly, again, taking a look here at the RSI, I mentioned how once this came back above the 414 of this fib retracement tool here, around 55 on the RSI, we go back to each time where we see the green bubbles. Every time the RSI broke above that, the uptrend was then switching more into a momentum move towards the upside, higher volatility, signaling and identifying a major uptrend in the broader, longer term bull market. And so far, you can see here, zooming in, that with this, what you could see more clearly here on the 6 hours I was going over right here, this choppiness more recently, this move right here from around 68.5 to around 63.5. It's around a $5,000 drop. So we saw the RSI come down and roughly retest 1.44 so far, finding a bounce. So right now, at least on this 2-day chart, it looks like there's definitely, given that there's not any bearish divergence forming right now, for this to continue to go up and break this resistance up here, which still is finding approximately around 71K as it was on the 6-hour chart. Lastly, seeing this RSI go above the 6 and 8 is going to be kind of the final indicator for this chart, in my opinion. As you can see, each of these times on the after the green bubbles, at least, given and following with the pattern, this is definitely when the volume and the volatility and the momentum towards the upside and the beginning of a new uptrend starts to begin, as we see these white volume vector candles printed right here each of these times at the beginning of these runs so far. Moving into the 4-day chart, even more bullish affirmation here with we can see the RSI. I mentioned in the last video, finally we've seen turquoise dot outside of the Bollinger Bands, which, going back in history, in bull market scenarios when Bitcoin has been in long-term uptrends, especially when it's heading to all-time highs, and we see the RSI go below and outside of the Bollinger Bands, print this turquoise dot. In most cases, a longer-term uptrend is going to begin, and then lastly, seeing the median of the Bollinger Bands flip turquoise as well, or bullish, which has happened within the last, right within the last, like, I think it was like 48 hours, 24 hours. On the 4-day chart here, there's a sideways resistance also sitting at around 70 to 71K, like I've been saying. Moving into this 2-weekly chart, if you look here at this pink resistance, with this ascending resistance from the double top of candle closes were 57.8 to 61.5 at the prior bull market. Depending upon when Bitcoin's going to then continue to reverse towards the upside here, let's say it is within the next week or so, 2 weeks, within the next, broadly just within the next month, given that July is coming to an end here soon, would see around 81 to 82K. Once Bitcoin could see a 2-weekly candle close above that, then this would be the final higher time frame, not necessarily the final, but at least specifically with this 2-weekly chart, a higher time frame resistance, one of the final ones to break. When it comes to, if I were to draw to the wicks instead, I mean, that's pointing more towards around like 94, 95,000. But more importantly, on the higher time frames, you want to look out for the candle closes rather than the wicks. But if you look down here at the 2-week RSI, wanted just to point out again, these long-term bull market trend zones you see for each of these prior bull markets, even going back to this one back here, which I didn't draw one on, but can roughly highlight what I'm pointing at right here. This kind of just ascending zone where you'll see the bull market find support as it goes up over time. Bitcoin seeing one here recently again with the current bull market, also finding a bounce within this as well. Also along the median that I've used here to denote when Bitcoin, once Bitcoin crosses this on the 2-weekly, you can see each time the bull market is then beginning or has already begun. And then lastly, we look here at this weekly chart on here. It's kind of the grand picture that I have painted for what I have been seeing, or what I think we will see, at least approximating roughly over the next 6, 7, 8 years, leading into 2030, 31, 32 for Bitcoin. If we look here at these pink dotted, these vertical lines, these represent the candle close lows for each of the bear markets going all the way back to 2011. The orange vertical, these represent the Bitcoin halvings, these horizontal yellow lines. Each of these are put at the candle close for the all-time high in the phases and cycles of Bitcoin that I've denoted and elaborated on more in past videos. And then each of these ranges, so the orange and then these turquoise. The turquoise represents, please zoom in here to the first phase of cycle 1. This right here. This turquoise represents when Bitcoin's going back above. It made the first local low before going back above the prior all-time high, which would be right here, leading into the end of a phase or the end of a cycle, which the end of a cycle correlates to the end of phase 2. So we can see right here. Once this phase 1 ended back here 2013, then continue to enter the bear market, set the low, candle close low. We see the Bitcoin halving, then builds up to the prior all-time high, crosses it. We see the turquoise zone and also the orange zone, which just extends in terms of time. How many days after halving it took Bitcoin to reach the end of a phase or a overall cycle. Then we see the same thing here for the first half of phase 1 of cycle 3. Prior all-time high, low, halving, orange and turquoise zones denoting time after breaking prior all-time high and time from the Bitcoin halving. And then here we have the projection for the current cycle, or the current phase rather. Cycle 3, phase 1, entering into the final, or the end of phase 1, which is synonymous to the phase 1 that I went over in 2011. Just extended in time, and also the bear markets are less bearish, bull markets are less bullish. But here we can see Bitcoin is actually, in comparison to prior phases and cycles, it's a little ahead of itself. If we go back and look at each of these halvings, we can see this first one back here, 2012, November. Bitcoin wasn't at the prior all-time high yet. As you can see, there was some time, some space here before that happened. In 2016, you see the same thing. In 2020, you see the same thing. Whereas with the current halving, or the recent halving, in 2024, Bitcoin had already reached the prior all-time highs. So looking at price in terms and in comparison of the halving seems to be ahead of itself in terms of an uptrend or a bull market, which is one of the reasons why I think this will end. A lot of people have been pointing out, I've been seeing later 2025, but there's also a number of people that believe Bitcoin will top out more towards the early, like Q1 of 2024, or 2025 rather, which is what I lean towards as well. But also, if we look down here at these numbers that I have, 3.61, 3.85, 93, 3.957, so on and so forth, each of these denote how long the halvings were. So from the first halving to the second halving, it was 3.61 of a year. So not fully 4 years, 4 years, but 3.61. Then from the second halving to the third, we see an increase, 3.85, an increase of, in terms of, if we look at this in addition, or additive 0.24. And then from the third halving to the fourth halving, we see 3.93, which is an addition of 0.08. And if you look at from 0.24 to 0.08, it's 1/3. 0.08 is 1/3 of 0.24. So I kind of took this as a potential pattern. So I reduce each of these bottom numbers here are what's going to be added to the prior halving number. So 3.957 plus 0.0058 and a 9 got to 3.96. Each time I reduce the additive factor, which is the lower number, by 1/3, and then add that to the prior halving. And you can see that once you keep going on multiple iterations of this, looking at these top numbers, 3.969, 3.969506, 969,835, 969,945, 969,998. Whereas this bottom number is just it's gone from 2 zeros, and the last one it was at 4 zeros, and then after that it would be taking the third of that again. And so far, could go out further, but at this point I think it clearly looks that the halving, if there is some sort of legitimate pattern here, the halving is approaching and converging upon 3.97. So it's not necessarily fully 4 years, obviously, but very close enough for all intents and purposes, which I use to put a little zone around the next halving. So for example, the next one, 2028, somewhere around March to July. This one from 2032, somewhere around February to June. And then for I don't have the time on the 2 weekly chart. Give me more time. And then for this, let's see, 1, 2, 3, 4, 5, 6, 7. So the seventh halving I extrapolated on here from around February to June. So if there is, again, like I said, some sort of a viable pattern here, and the halving is actually just converging upon 4 by converging specifically to 3.97 approximately, then eventually once we see this time of having stabilize out, whereas you can see there's been this increase from 3.6, 3.8, 3.9, as it stabilizes out towards 3.97, we'll then start to see the halvings happen. It'll stick more to a tighter range of time within a month, rather than, if we look at the first one, it was in November, then June, and then May, which June and May are close, and then April, May again. Actually, April, yeah. And then with the next one, like I said, February to June, July. So started out late in the year, then shifted more towards the first half of the year, and so far each of this time has become closer towards around like March, April, May, which, as it seems, it could be stabilizing out somewhere around February, March, April, May, June. Let's give it just a 5-month range, somewhere within those 5 months, where we could see over the next 10, 20, so on and so forth years, however long Bitcoin lasts, we'll perhaps see the halving stabilize out towards those 5 months that I mentioned after January, first 5 months. So just generally within the first half of the year. But lastly, I just wanted to quickly point out again, I think, like I've been saying for quite some time, approximately 2030, we'll see Bitcoin at 1 million. Could extend up to around 1.3 to 1.4 million, approximate highest. I think at latest 2032, beginning of 2032, quarter 1 of 2032. At latest is when I think the next, currently we're still in cycle 3, but phase 2 of the cycle 3 that we're in, once we see the phase 1 of cycle 3 end, which we're going into that all-time high, and we'll see the next phase, which is this aspect right here. If we look at these time tools, 105 bars is the length. Actually, let me go back down to the weekly. On the weekly, we see the length between these. So 210 bars for phase 2 of cycle 2 back here, 2014, 13 to 2017. Now it's going to have to be longer according to my theory, and I think just commonsensically, and obviously from observing the chart, the Bitcoin is decaying and it's maturing in some sense. Therefore, the cyclical progression that Bitcoin presents is being extended across time and also becoming less volatile, both towards the upside and the downside. So this phase 2 of cycle 3 is going to have to be longer. So I don't believe that at earliest we could see 2029, like generally first half of 2029, quarter one of 2029 would be the very earliest, which would be putting it right at happening at the same length. So really, in my personal opinion, I don't think that's likely at all. I mean, although it could definitely happen, but it has to be sometime later. So I mean, if you go out 100 more bars, that puts it towards beginning of 2031. Now, beginning of 2030 would probably be more reasonable in my opinion, which would put it somewhere around 260 to 270 bars, so around a 50 bar increase, around 50 weeks, 50, 60 weeks or so increase in time. The last thing that I wanted to go over on this chart was, so I mentioned the price target for the end of this phase two that I've been talking about, somewhere generally between 1 to 1 for approximately million by approximately 2030, 2031, 2032. This beginning at somewhere around approximately 200,000, give or take 50,000 for the upcoming all-time high of the current phase one of cycle three. Now, this bear market is what I want to touch on. And I've been saying approximately 50,000. It's definitely the bottom of the barrel. I don't think as Bitcoin sets an upcoming new all-time high, leads into the next iteration of a bear market for the phase two. I don't think it will go any lower than 50,000. That is supported by the vector candles in this bull market so far. This first one right here was already recovered, and actually let me turn these little vector boxes on so we can see it more clearly. So if we look here at these boxes at the right, we see these black volume boxes, denoting where Bitcoin, there's high interest of volume. For example, this white candle was printed because it had a higher volume than the prior 10 candles on average. And it shows areas of interest if you're looking at the market in terms of a market making structure or a market maker structure, where we'll see the price retrace down to find support and continue to go back upwards. Now, most of these zones, they were already met sufficiently. So these two bottom zones right here, I don't think are worth any interest for an upcoming bull market or a upcoming bear market after the current bull market to see Bitcoin retrace to. If I actually take it a little bit higher, we can see some boxes in similar zones, and we see this larger box right here going down around 46.7 thousand. Again, around approximately really the middle of this box is 50,000, like I was saying. So at highest, I think it would retest somewhere around maybe approximately 60,000 to 69,000. This lines up with the Fibonacci retracement that I've gone over that has predicted every single one of the all-time highs so far in Bitcoin's history. You can see right here, which is this upper green zone, specifically the 2.321. Now the prior phase two of cycle two, so this back here, this bottomed out with wicks roughly halfway in between the 1.618 to the 1.76, which would put the next bear market's low somewhere approximately, let's just say 70 to 72,000, maybe down around like 69, 68,000 with some wicks. But the 1.618 goes all the way down to 62,000, and then the 1.5 goes all the way down to the approximately 50,000, like I've been mentioning. Now, if you look at assuming somewhere around like 200,000, 220,000 is all-time high, just roughly there. Going all the way down to 50,000 would meet 77%. That's basically 77, 78% is what the bull market from 69 to 15, or bear market from 69,000 to 15,000 was that percentage drawdown. And then so far, we've clearly seen each of the bear markets, their percentage drawdown is lessened over time. So I'd assume it would be some degree lower than that, although halfway between the 1.618 to the 1.786 is 68%, so it would be a 10% decrease from the prior bear market. So far, there hasn't been that big of a decrease seen, but nonetheless, it's definitely possible. It does line up with the fib retracement. So far, the all-time highs have been met every single time, so I would assume that if this is a pattern, a trend that's going to be here over a very long term for Bitcoin, then this bear market criteria would be met as well. Although I definitely think it could still come down to around 50,000 in the case of these volume vectors and these volume zones, and even also coming down because the 1.5 also sits at the around 50,000, which is a part of the golden pocket zone that I typically like to use. But that was the last thing that I wanted to go over in this video. So as always, none of this is meant to be financial advice. Hopefully you were able to find something educational from this and generally enjoyed it. But all of that being said, I hope you all have a wonderful day.